Thank you for joining me today. A lot of our clients have wanted to help their children or other relatives with cash to help them accomplish a financial goal. But gift taxes and other restrictions have limited what they were comfortable in doing. So our tax and legal team got to work and developed several sound strategies that can apply to intrafamily loans as part of an estate plan. Now, when interest rates are low, intrafamily loans can be a good way to assist a child or other relative in purchasing a home, a family business, and in certain circumstances, these strategies can be used to gift money to the next generation. An intrafamily loan allows family members to borrow money from each other at a special rate, but it must be structured properly so that the loan is not considered a gift. This means the loan must have a written promissory note, require repayment, and charge interest if the loan is more than $10,000. The IRS sets what's called the AFR, applicable federal rate, each month, and the interest on an intrafamily loan must equal the AFR. Now, this rate is different depending on the loan, which can be short-term, 0 to 3 years, mid-term, which is 3 to 9 years, or a long-term loan, which is over 9 years. The AFR is typically lower than the interest rate a bank would charge, and the borrower's credit obviously doesn't affect the loan. Now, when structured properly, intrafamily loans can assist children with purchases and pass on assets. So here's 3 ways that an intrafamily loan can be used. The intrafamily loan can be used to pay for a house. This can be used to fund a mortgage for children or grandchildren. Because the interest rates are lower, the children will pay less overall than going through a traditional mortgage lender. Now, intrafamily loans can be used to pass on a family business. We do a lot of succession planning. And depending on how large the business is, giving away a business could exceed the prevailing gift tax exemption. So, instead, parents can loan money to a child to purchase the family business. Parents who are financially able could use the annual gift limit, $15,000 in 2021, to give the children money to repay the loan. Alternatively, if that family business produces income, the child can use the income to pay back the loan. Even if the business doesn't exceed the gift tax exemption, this could be a good strategy for parents who want to pass on the business but still need a steady income stream. Now, intrafamily loans can also be used to pass on assets. Intrafamily loans can be used as a method of passing on these assets, provided the borrower can invest the money in a way that brings a higher rate of return on the interest than the interest on the loan. So given the low interest rate on intrafamily loans, this has been a successful strategy. If the loan is a large one, it may be wise to loan the money to a family trust. The trust invests the money and repays the loan. After the loan is repaid, the remaining assets are protected by the trust and can be distributed to the beneficiaries as dictated by the terms of the trust. The downside of an intrafamily loan is the same as any loan. The loan must be repaid. If the child defaults on the loan, it could trigger a gift tax for the person making the loan. It's also important to have the correct paperwork and documents. Intrafamily loans should only be set up in a joint consultation with your legal and tax experts. So if you'd like to continue this discussion on a more personal level, there's a link to book a time for a conversation with me. I encourage you to take that first step because it all begins with a conversation. Pick a time and let's have that conversation now. I also encourage you to take the quiz that's in the related content section to see if you and your family could benefit from working with a family office. In the recommended content section, there's a document to see if American Wealth Strategist is that family office. But I want to thank you for watching, and I look forward to talking with you real soon. Thank you.